The US dollar is vulnerable to speculations that the Federal Reserve might cut interest rates this year. Today, the greenback rebounded marginally. However, dollar bulls are cautious, foreseeing information which could hurt the shaky recovery of the US currency. The greenback seems to have lost momentum as its index has been sliding for 3 sessions in a row. Yesterday, the index incurred serious losses, having fallen sharply below 99 points. The US dollar index opened the New York trade with a minor bounce to near 99.04. It is unlikely to stay above 99 for long. Investors are worried that the US economy will be eventually overshadowed by the coronavirus. Market participants pin hopes that the Federal Reserve will signal monetary policy easing this year. At present, investors are willing to buy assets with obvious protective features, so risk aversion puts extra pressure on the US dollar. Yields of 10-year US Treasuries dropped a record low of 1.3%. At the moment, the dollar-yen pair rouses interest among traders as it could accelerate the downtrend. Earlier, the yen plummeted as traders were evaluating prospects that the current quantitative easing program could be expanded due to recession risks in the domestic economy. However, the Bank of Japan rejected this information. Analysts do not rule out the nearest support level of 108. One of the reasons behind the US dollar's weakness is expectations of downbeat macroeconomic data from the US. So traders are poised to continue selling the US dollar until the US reports strong economic data. Today, traders are anticipating new home sales data from the US. Meanwhile, the US dollar versus the Canadian dollar pair is approaching the level of 1.33. The loonie, like other commodity currencies, are trading under pressure as oil quotes are heading for new lows. The International Energy Agency downgraded the forecast for oil demand to the lowest level in the latest decade, citing the coronavirus outbreak. If the epidemic is not stamped out in the near future, the forecast will be again revised for the worse. Today, traders are alert to speeches by several Fed officials. The market expects dovish remarks. However, if they do not drop hints about monetary easing, the US dollar could resume its rally. That's all for now. Thank you for watching and stay tuned.